Hello. Are you concerned with what's going on in the market right now? Let's talk. We believe at Cetera that we have reasons to be optimistic in this downturn. I'm going to share some insight from our Cetera Investment Management commentary. Came out on March 10th. Equities obviously have been under pressure. We've seen concerns around tariffs, economic slowing, and AI uncertainty. This weakness could present a buying opportunity. And as always, with heightened market uncertainty, diversification is even more prudent. Digging into this in a little bit more detail, we believe there are several key reasons to be optimistic. One, while the economy is moderating, a lot of this recent moderation or slowing, you could say, is due to extreme cold weather that we saw in January. January was the coldest that we've had on record since 1988. When it's cold out like that, people aren't out moving around, buying things, shopping, so on and so forth. So we believe that some of that could be related to the weather. Another thing that we hear about each and every day throughout the day are tariffs, right? Now, we have a couple of things to kind of point out with regard to tariffs. The administration has certainly referred to them more as retaliatory than universal, which could be a positive sign. And when we look back to 2018 as a base case, tariff negotiations, could linger longer than expected, but the market overall could, kind of process through it relatively quickly. We saw that in 2018. We were back to pre-tariff levels by May of 2019. Overall, the environment for equities looks good. When we look at the corporate earnings expectations, companies are profitable, they're making money, and their earnings are growing. So that's a good sign for the market and for stocks. Also, there's a little bit more, friendly regulatory backdrop, which could potentially, improve that as well. So this next bullet point gets rather technical. I'm going to kind of skip to the bottom here and just say, in the event that we have a steeper than expected sell-off, in the event that this continues further than we may anticipate, there's over $7 trillion in money market assets that are sitting on the sidelines that investors could stand to deploy to buy stocks at lower valuations, lower prices than they were at on February 19th when we hit that last high on the S&P 500. So obviously there are some kind of headwinds out there overhanging equities right now. This is a great time for us to connect. Let's talk. Let's discuss how this impacts you, how this impacts your plan, and what adjustments may need to be made within your portfolio.